The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
And joining us now to discuss the markets is Raghu Yarlagadda, CEO of FalconX, a crypto brokerage and digital asset trading platform. Good morning, Raghu.
Good morning, everyone. Thanks so much for having me.
Morning.
Good to have you. All right, so Raghu, FalconX interacts with institutional investors. What kind of volumes are you seeing from high net wealth and company investors?
Yeah, zooming out a little bit over the last 2 weeks, Lauren summarized it really well. Over 2 weeks back, I think primarily because of the China news around fintechs mandated not to engage with cryptocurrencies and some of the mining restrictions, Asia retail definitely started the sell-off. And at that point, 2 weeks back, the market was very levered. As a result, any moves, especially the downward moves, tend to be very amplified. We've seen that, right? Asian institutions got caught in that retail triggered move. But the good news is US institutions, especially the macro funds, are showing very cautious optimism. Especially they started buying on Bitcoin and Ethereum as well. What is different from over the last 1 month to now is the focus and an emphasis on Ethereum. Yesterday we had one very large corporate treasury specifically inquire about Ethereum, not just Bitcoin, primarily due to ESG concerns. So fast forward that over the last 2 weeks, what we see is like the market, testing this 37,000, and on the upper side of the band, 41,000 is where we see a lot of limit orders from institutions getting placed. But in terms of volumes, definitely the volatility dipped over the last 1 week. The volumes are about 65% that we saw about 2 weeks back.
So, Raghu, welcome back. The question, you just brought up this whole thing about the 41,000 or so where the limit orders are currently sitting on the market. But do you think that the market has enough, gumption to get over that hurdle there? Do you think that it'll take more leverage to get over it, or is there still adequate enough interest in the cash market to do it? Or do you think that the leverage might come in, but to the downside?
Yeah, that's interesting. At this point, based on the data that we see, we don't see any strong drivers that are going to push past that 41,000 band, primarily because, as you rightly pointed out, the leverage is not there to push it past the 41,000. But anecdotally speaking, with a lot of institutions, especially the macro ones, momentum traders are sitting back a little bit in terms of just to observe, to see where the market goes. But the macro funds definitely are waiting for news around the infrastructure bill. And infrastructure spending to the tune of $3 to $6 trillion could potentially bring back the use case of Bitcoin, Ethereum to some extent being an inflationary hedge. News like that could trigger the market to move beyond the 41,000 mark. But looking at the data in terms of what we have now, we don't see any strong impetus to blow past the 41,000.
So this might seem like a little bit off the wall, but you did bring up the whole issue of Ethereum and Ether and treasuries now starting to get interested in it. Could we have a situation, even though Ether, the entire market cap there is about half of that of Bitcoin, but could we have, in terms of the markets, a situation where a rally in Ether drives a rally in Bitcoin rather than the usual, which is vice versa? So right now we talk about decoupling or a weak relation, but do you think that that Ether might be the thing that pulls Bitcoin up rather than the reverse?
Yeah, that's the billion-dollar question, isn't it? For the longest time, over the last 1 month, typically what we saw is like Bitcoin to Ethereum. If you look at the buy ratios, Bitcoin used to be, about 3.5, 4 times more than Ethereum. But over the last 2 weeks, especially after the ESG concerns, and by the way, the ESG concerns are not temporal. We see institutions, especially corporate treasuries and the macro funds, keep bringing that up over and over again. Largely because of those conversations, now Bitcoin to Ethereum, the buy ratios is somewhere around 2:1. To summarize all of that, Ethereum is catching up, but I still think it is definitely behind Bitcoin, and I think it'll continue to be behind Bitcoin for at least the next few weeks based on what we're seeing.
Good morning. Welcome back. My question is just quite a big question, which is, are we still in a bull market, and how do you define that?
Yeah. Compared to 2017, Emily, definitely we are in a much more healthier and sustainable market. Specifically, what I mean by that is 2017, the major use case that we've seen is speculation, right? The speculation that digital currencies could empower a whole variety of use cases which were not feasible before. But now, fast forward to 2020 and 2021, we see a lot of real sustainable demand from US institutions first, and also to some extent Asia institutions as well. So we are definitely Bitcoin, as we all know, that it's not at the 60,000 mark. But as we are at the 38,000 and 39,000 mark, what we are seeing is the long-term focus on Bitcoin being an inflationary hedge, number one. Number two, the operational efficiency that all the cryptocurrencies, especially things like stablecoins and DeFi, bring to the table is very interesting. To give you a specific example, we've seen some of the largest hedge funds on the planet come in for Bitcoin exposure, primarily citing inflationary hedge as the argument. Now, as they come in, they realize that 2 out of 7 days, their balance sheet is sitting idle. Why? Because banks are not open. So slowly, they started looking at stablecoins, specifically USDC. And once they get into stablecoins, their balance sheet efficiency increased. And after that, what they see is, okay, these stablecoins are based on top of Ethereum, so let's dig deeper into Ethereum. Now it's Bitcoin and Ethereum. The reason why I say that is this was not there in 2017. The long-term focus coming from institutions is a very much 2020 and 2021 trend. And the good news is, even in the recent correction, we didn't see these institutions run away. We didn't see some of these macro funds pack the bags and run away at all. And that's a very good sign. But do I say that we are in absolutely a bull market? No. Market is going through a minor correction. These temporal minor corrections are needed for the long-term health, for the crypto markets.
You mentioned Asian retail traders. That's really interesting because it's really hard to get geographical data on where trading is happening. So I'm just curious, when you say Asian retail traders, who do you mean? Which countries do you mean? And how important are they in this current bull run or whatever we call it?
So we only serve institutions, Emily, but we do have access to the retail markets, to retail aggregators. Essentially, these are payment networks, potentially neobanks servicing the end customer. And for them to get enabled into crypto, FalconX provides the APIs, whether it's liquidity, credit leverage, clearing. And through that retail aggregated flows, we actually see the retail sentiment pan out really well and intersect with institutional sentiment. When I say Asian retail, through our retail aggregators down in that region, specifically, you're talking about South Korea, Singapore, Hong Kong being the more active belts through which FalconX retail aggregators are connected. And when we look at their end customers, it's oftentimes small traders on exchanges, high net worth individuals going through the local OTC desks. That is the persona that I'm referring to.